What's going on, everybody? Michael Silva here. In today's video, I'm going to tell you why that I just bought more gold. Yes, I did add some physical gold to my collection. If you watched my last gold video, you might remember this chart. We mapped out 4 key levels, and during an overnight session, gold came all the way down here just to below 1700 and tagged our area of support perfectly. I told everybody August 8th, I just added 1 more extra ounce of gold to my collection on this pullback. And I have 3 other targets that I am watching. Let me show you this chart right here. This I find very interesting. And just look at the price of the median home price sold for the United States. You can see dating back from the 1965 from the Fred website. We're over here at under 40,000, and now we're at an all-time high, just under 400,000. There's soon going to come a time where, 20 years, 30 years down the road, the median home price in the United States is going to be $1 million. I don't know if that's going to be the case or not, but what I do find interesting, if you're looking at it in terms of gold, and you're saving in gold and not in dollars, well, let's just take a look at this chart. This is the Shiller Case Home Price Index divided into the gold ratio, and you can see here we're right at about 260 ounces of gold it costs to buy a home, and that's the same exact price as it was right here in, say, 2015, okay, in terms of gold. And if you look at 2015 right here, if you were saving in dollars to buy up your house, well, your dollars, the value of them are being priced away with inflation. So $280,000 was the average home, give or take a little bit right there, and now we're looking at 360, but yet it's the same price in terms of gold. I found that quite interesting. And this chart right here was from Stephen Flood, boom, right here. And he put together this little blog article, and he said the true value of gold and silver. And so the cost of the Corvette in 1971, it cost $5,496, which was 135 ounces of gold, 3,500 ounces of silver. And now this 2020 Corvette costs $67,000 United States dollars, right? But then it costs significantly less in terms of ounces per gold, and then also less in ounces of silver. So that's just something interesting that I want to share. Let's hop into the price of gold right now. We just broke out of a down-sloping trend line, so that is a very good thing. We want to hold there a couple of days above these moving averages. That'd be good, and get back above 1840, this previous swing high right here. Then the next spot of resistance is right around 1900. If we look at a weekly chart, we're getting some follow-through on this hammer candle right here that tagged the lower Bollinger Band. Bollinger Bands are contracting, as we see right now, and we have a little bit of a positive divergence taking place on the PMO. If it starts crossing up here, that'd be a good sign. So it definitely looks like the price of gold has some momentum in it to go tag the upper Bollinger Band right around 1900. Wouldn't be too shocked if it gets up there, but what we'd really like to see is it start breaking through those levels and getting some momentum to the upside. Now, if it were to do that, I would expect to see the dollar fall. We'll get into that chart here soon. Let's look at the GDX. I found this interesting, taking a look at miners. If you measure from the fib retracement from the 2020 pandemic low to its previous swing high, we did pull back to a 50% retracement level. We bounced from that level, and now we started to see a very pretty, from a monthly time frame, a very bearish looking month here, but we still found support right at the 50% retracement level, which is at $30.65. So this potentially, if that breaks, I think we go down to 27.16 in the miners. However, it's still holding as support here on a monthly time frame, so some support right at 30.65. This could be a good dip for the miners, and if we start getting back above 34.15, we can go try to take out that 40 level again for the GDX and various miners. You could also look at the GDXJ. This is the BPGDM, the Gold Miners Bullish Percent Index, and what I wanted to go over here was really this below 25 or this 25 range right here. That suggests that we're pretty oversold in the miners. So if we come even a little bit further down, this says, hey, sentiment might change where it's, significantly bearish, might be the time to start buying into the various miners. And then also, if you look at this sentiment index, the Hulbert Gold Newsletter Sentiment Index, this is the most recent one that I can find. It's not quite there yet into this very, very bearish sentiment, but it's not far off. So it does suggest that there could be potentially more downside here in the miners and in the gold market, but when it comes into these low reading levels, that's typically a point where you want to get a little bit more bullish. Now let's take a look at the dollar. This is going to be the key to most of it. When the dollar falls, that is very good for the price of gold. You can see here the last previous trading day, the dollar came right back down into its previous trend line, this upsloping trend, and you saw this big move in gold. However, if this holds its support and starts heading higher, I think that forces the price of gold down. Now, there's been times where there's a positive correlation, but for the most part, if you look throughout history, it's typically a negative correlation. So commodities really start performing well when the dollar falls. And a lot of economists and very intelligent people are forecasting that the dollar will fall significantly here in the future. But there's also some very intelligent people that's saying before the dollar really does collapse, we're going to see a pretty big move to the upside in the dollar, which could very well force gold prices down. But then you need to, like I said, be very prepared to look for key levels to be purchasing. Today's video was brought to you in partnership with Altaley Mining. Altaley Mining Corporation is a Canadian-based mining company. They have two 100% owned Mexican gold, silver, and base metal projects. They trade in the U.S. market under ticker symbol ATLYF. Before we talk about Altaley Mining, I just want to say thank you for supporting the channel. It means the world to me to have such amazing sponsors come in and support me, as well as the many subscribers, the people that engage with my content, and the now over 700 patrons that support my channel. Thank you so much. Altaley Mining's management team has a combined 250 years of experience within the mining and capital markets. This company, it's run by the same crew that built Endeavor Financial into one of the most important mining groups in the world. It's led by CEO, President, and Director Ralph Shearing. He has over 30 years of experience management with publicly listed companies. Mr. Shearing is a graduate of the University of British Columbia, and he's holding a Bachelor's of Science in Geology degree. And since graduating in 1981, he's practiced his profession as a professional geologist throughout Canada and internationally. David Rhodes is the chairman director, and he has a very interesting, very interesting bio. If you actually just look him up, you can see here, he has over 30 years of experience in the finance industry, and as a result, has arranged over $10 billion of funding for mining companies across the globe. You can take a look at all the companies here. I'm always curious, like how do you become that? How do you step into this role? Absolutely incredible bio. This slide right here shows the shareholder base, and you can see that it is tightly held. 33% is owned by the management and board, close management and associates 12%, and then institutions, as you can see right here on the right-hand side, hold 22%. So that leaves a 33% public float. Altaley Mine has two projects, their flagship Tahuehueto project and the Campo Morado. Campo Morado, it is the 6th largest zinc concentrate producer in Mexico. They're already producing $2 million in monthly EBITDA, so that is a good start. Now they're trying to expand. They're 60% on the way there in the Tahuehueto project to being a fully operating mine, and then that's going to take them from being a base metal producer into a potential precious metal producer too. Altaley Mining has two methods of growth. First is to increase production by 1,000 tons per day by completing construction of an existing flotation circuit. This would amount to a 33% increase of throughput capacity. The second way to increase its revenues is by successfully completing a metallurgical testing currently underway on the site with a pilot plant. Now, this program is successful. The company envisions a significant increase in metal recoveries from both base metals and precious metals, which can markedly increase the project revenues. You can see the forecast for growth right here, looking for 90% growth going into 2022. And that big growth is going to be done by their flagship property if they can start mining more, obviously, precious metals. You can see here the 2021 forecast is the Campo Morado, and then you can see the big change here with Campo Morado with the Tahuehueto project. The Tahuehueto mine is their flagship property. The turbocharger is when really companies are able to show the market that they're not just a one-trick pony, but they have multiple mines all running at the same time. They'll get more attention by that. Now, the mine is 60% complete. They've already raised the capital, got the permit secured, and is in constructing a second mine. So in 4 months, the company will be running that new gold mine. The addition of Tahuehueto will double metal sales and EBITDA. The revenue breakdown is 69% gold, 12% silver, and 19% base metals. So over the first 4 years of operation, Tahuehueto is forecast to add 30,000 ounces of annual gold production plus silver and base metal byproducts, which is pivotal because it changes Altaley Mining from a base metal miner, just zinc, to a gold-focused business, and that attracts more shareholders. The all-in sustaining cost is $808 an ounce of gold equivalent, which is super low, and that's a big advantage because the margin over spot is nearly $1,000 an ounce, and that's over 100%. So after optimizing the Campo Morado and making it a profitable and more efficient in extracting gold and silver, and after getting the Talwedo into production in 4 months, the company will set its sight on acquiring more near-term production gold projects, potentially poorly managed existing mines to turn around. The transition from a single mine entity to a 4 to 5 mine company changes the type of shareholder base a company attracts and re-rates it to a potential mid-tier, which normally trades to double the valuation, which could be a very big catalyst for Altaley Mines. So there's 3 things to really summarize here about Altaley Mining. The first being that the Campo Morado is an existing mine. It's now profitable and trades for a low valuation with efficiencies in extracting gold and silver in the works using brand new technologies. The second thing is the Talwedo is 4 months away from becoming Mexico's next profitable gold and silver mine with funding and permitting already secured. The third thing is that the management, which has built multiple $1 billion plus mining companies, is eyeing a shopping spree in Mexico for more gold projects to come. If you want to learn more about Altaley Mining, I suggest you go to their website. You can also look in the description below. There is a 45-minute long, very detailed interview of Ralph Shearing going over the corporate presentation. As you already know, there is risk involved in investing in various companies, so please do your due diligence before making any investment decisions. Thank you for watching. See you on the next show.